We are finally starting to see a shift in the Orange County housing market that could benefit you as a home buyer. With supply rising faster than buyer demand, we're starting to see the expected days on the market increase, which in turn could mean some sellers are going to need to reduce their home prices in order to sell. But at the end of the day, that's not the only thing happening. And that's what we're going to discuss in this month's Orange County housing market update, so that I can help you make the best decisions as a buyer, seller, or investor in the Orange County housing market. Now, before we dive into today's data, I want to take a step back and talk about seasonality in real estate, because it's really important to understand the ebbs and flow of how inventory comes to the market, what happens to buyer demand for this time of year. And with that, I primarily want to focus on what happens during the spring housing market, which is essentially the market that we're currently in. So typically we start the year with the lowest level of inventory that we'll see all year until essentially the end of the year. And during that period of time, inventory typically starts to grow all the way through June or July, at which point we see inventory flatten out and decline through the remainder of that year. Now, the last couple of years have been abnormal because we've started the year with some of the lowest levels of inventory that we've ever recorded on record. And instead of inventory increasing during the spring market, we've actually seen inventory go the other way, which means instead of adding more homes to the market, we've actually seen fewer and fewer homes come to the market, which in turn has caused the craziness that we've seen over the last couple of years, with more buyer demand than we've had supply of homes. And in order to see housing affordability improve and the housing market shift, we really need to see more supply of homes than we have buyer demand. And at the moment, we're finally starting to see supply rise faster than the current buyer demand, which in turn has caused our days on the market to increase from 40 days to 41 days. Which isn't a huge shift, but anytime days on market are increasing, that is typically going to favor buyers more than it is sellers. But it's always important to understand it in context. So prior to the pandemic, which is the craziness that we've experienced over the last couple of years, it still hasn't stopped. It's only moderated a bit, but prior to the pandemic, the average days on the market for this time of year would be sitting around 63 days, which is slower than where we are today. But to follow that up with a little bit of detail, last year, 2003, we started the year with somewhere around 2,500 homes on the market. And we slowly lost some of that inventory because buyer demand was higher than the supply of homes coming on the market, which took us down to 2,168 homes for this same week last year. And while current inventory is actually less than we were this time of year, sitting at 2,007 homes, the good news is that inventory has been increasing this entire time versus going the other direction, as we started 2024 just over 1,700 homes on the market. Now, what I'm talking about here is all relative depending on your price point and where you're actually located. One thing I always like to point out in these videos is that real estate is local. So depending on where you are and what your market is doing, it might be a little bit different than what I'm talking about here in Orange County. In fact, here in Orange County, it can be a little bit different depending on the neighborhood that you're looking in, depending on the price point that you're looking in. And that's exactly why we're going to talk about these different price points here in just a minute. But before we do that, I'd like to take a minute and ask a favor. If you find any value in my videos at all, do me a favor and hit that thumbs up. And if you want to stay updated on everything Orange County real estate related, do me a favor and subscribe to the channel. Now, I do realize there are people watching the video thinking or hoping that there's going to be a crash coming, that everything I'm talking about, this inventory increasing, is going to lead to some huge shift in the housing market. And quite frankly, I don't see that at all. That's why it's important to go back and look at where inventory was prior to the pandemic, which essentially kind of catapulted all the craziness that we've seen over the last couple of years, adding to buyer demand, the Fed taking the Fed funds rate super low, stimulating the economy with all of this money, while at the same time, interest rates set between 2 and 3% for the better part of a year and a half. So instead, we like to kind of cancel those years out and take a look at what the market was doing prior to that craziness in more normal times. Well, during that time, this same week averaged between 2017 and 2019 would have just over 5,200 homes on the market, which is roughly 150% more than where we sit today. And the primary reason for that is because a lot of sellers are currently locked into super low interest rate that they were either able to obtain during that period of time or refinance into that loan that they were able to get during that period of super low rate. So it doesn't make a lot of sense for those homeowners to sell their homes and buy a home at a higher price with a higher mortgage rate unless they absolutely have to do so. So in turn, that's kept inventory off the market, adding fuel to the fire, if you will, when it comes to price stability in the market. The main reason we're not seeing prices decrease in any meaningful way, or decrease at all really, is because buyer demand and inventory are more or less moving in lockstep. And that's why I want to bring up this chart here on the screen. And you can see the dark blue here is really close to the light blue, which means demand is pretty close to the amount of inventory on the market. And if you want to see what craziness looks like, and go back and look at that same chart in 2001, where demand actually overlaps the light blue of that chart, which shows way more buyer demand than you have active inventory on the market. And that's exactly why you saw buyers have to make super competitive offers in order to get their offer accepted, because there were way more buyers looking for property than you had available inventory at that time. And also the same reason that pricing went up so much. But when looking at this chart, what I really want you to focus on is the time before 2020. More importantly, the time from early 2013 until 2019. See how much more inventory was on the market than we had buyer demand at that time? And yet during that same period of time, we had house prices continuing to increase. And one of the primary reasons for that is because housing affordability was continuing to improve because we were still in a 40-year downtrend in mortgage rates. But I think it's important to see how much more inventory you had than buyer demand, and yet the housing market wasn't crumbling. There weren't a ton of distressed sales. And more importantly, no one was giving their house away to a buyer that just showed up and made a lowball offer. And the reality is that's not going to happen in 2024 either. You're not going to see sellers just give away their homes. Now, I do believe the housing market could continue to stall further, at least for the next couple of months, while interest rates stay high. While I did say in my Orange County forecast, which I'll link to here, that I did expect interest rates to get somewhere in the 5% range in the first half of 2024, I'm now kind of pulling back on that a little bit because the economic data that's out there seems to be reporting much better than I thought it would. While inflation is moderating and wage growth is moderating, employment on the other side has stayed really, really strong, giving the Fed reason to pause and not really have to do anything at all. And therefore, they've kept the Fed funds tight with the idea that they're not really going to pivot until they start to see a break in the economy, which I don't necessarily believe is going to happen in the first part of this year, which leads me to believe that it's probably going to be later in 2024 when the Fed finally starts to reduce the Fed funds rate, which in turn is going to lead to better spreads, which will ultimately result in lower mortgage rates. And as lower mortgage rates come, you're likely going to see a pickup in buyer demand. So until that happens, if inventory continues to increase at the current pace, there's a really good chance that inventory is going to surpass the levels that we saw in 2023. Now, it's not going to get anywhere close to the average between 2017 and 2019 that I mentioned earlier, but the reality is days on the market are likely going to go up. You're going to have a little bit softer market. So for those sellers out there that aren't priced correctly, they're going to have to adjust their prices a little bit more aggressively in order to get their home sold. Now, if you're a home buyer and or a seller and you're under that 1.5, 1.25 price point, chances are it's still going to remain pretty competitive out there just because you have more buyer demand than you have inventory coming on the market. As we look at this Orange County market breakdown, you can see that the current inventory under 1.25 million makes up 44% of the current inventory. But for that same amount of inventory, we have 60% of the buyer demand focused on that price point, which means that price point is still likely to be very, very aggressive when the home is priced correctly. Now, if you're at the upper end of the price range above $2 million, that's a much softer market, as you only have 26% of the inventory sitting above $2 million and only 15% of the buyer demand looking to purchase at that price point, which is really where you start to see the softness in the market. Now, here's what I'll say as someone who represents both buyers and sellers. I recently put a listing on the market at $1.575 million. And on that house, we received 5 offers on that property over the course of 2 weeks. And out of those 5 offers, 4 of them were cash offers, which is actually a little bit scary when you think about it. Now, some of them had a property to sell, others had multiple bank accounts that they had to pull money from, but there were 2 to 3 offers that had all of the money in one account and ready to go with a shorter escrow. So if you're a buyer out there in the market and you're thinking of waiting to get pre-approved, you're thinking of waiting to get your ducks in a row until the right property presents itself, I would actually like to recommend that you start that process sooner than later. Get all of your ducks in a row. Get everything getting ready so that when you do find the right property, you're ready to make an offer. Because if you wait, chances are you're going to be behind the 8 ball because you're not going to be able to react quick enough in order to get your offer on the table in order to be considered in many cases. Now, when I make videos like this, I often have people reaching out asking me, should I buy now or should I just wait? Wait for lower mortgage rates in the fall because that's going to make my housing payment a little bit more affordable. Here's what I'll say. I don't think you're in a rush to go out and buy a property right now. But here's what I'll tell you. I do believe as mortgage rates come down, it's going to increase buyer demand. Now, there's a high likelihood that home prices aren't going to be significantly higher in a couple of months than they are right now. So from that point, I don't think there's a rush to go out and buy a home. But at the same time, what I'll tell you is I don't expect inventory to increase in a meaningful way, which means as rates come down and more buyer demand comes to the market, you're likely going to have more competition in your price point, which in turn can make it very, very difficult to get your offer accepted. So the best time to buy a house is not only when it's the best time in your life, but when competition is a little bit lower, which, believe it or not, is actually the market that we're in right now. It may not seem any less competitive if you're out there going to open houses, if you're making offers and you're seeing multiple offers. But what I can tell you is that if housing affordability improves, it's going to make this time look like the market was standing still. So if you're a home buyer and you're looking to get started in the process, you don't have an agent, you want someone local to help guide you through that process, my team and I would love to be that person to help guide you through that process. So do us a favor and reach out using the link below. Now, at the same time, if you're watching this going, pricing is crazy in Orange County, how can anyone even afford the median home price? How can I put myself in the best position to get the most bang for my buck when it comes to buying a home? Well, I actually made a video that goes over it in detail that you can check out right here.